Hey, good morning, guys. Ken at Tortoise Capital Foundation's Q&A check-in for September 24th, 2023. I was going to do a little exercise in a minute here with some standard setups and talk about the power of visualization. But first things first, I wanted to talk about ruthless risk management first, with some practical applications. The first thing I want to do is talk about how important it is just in general. So the term comes from a live trading Kansas City, a research weekend, and then a live trading in Kansas City with the great Kim Anderson. So I want to give this. I think it's an E. So she's a Van Tharp super trader, a friend of mine for 20 years. And she came to all of the live trading workshops, and we had a nice little ritual going where she would be interested in something that came up during the research weekend, and then she would study the heck out of it for a year, and then come to the next workshop with a system in hand with all the results that we would need to do the work, and then refine that based on feedback into a course which she would then teach at VTI and incorporate in her own trading. So we had a nice little thing going. And she did some modifications to our swing systems, some personal modifications. She did a bear market strategy, which became a pretty popular workshop at VTI. And she also did a sideways markets course using it, and it became actually number 6 in the generation 1 of the RLCO pattern. So there's 7 standard frames or standard patterns in the regression line crossover system, and number 6 was a personal adaptation that she used and just liked. And so we call that the Anderson regression line stretch. And so she briefed that one of those years. Well, here, the genesis of the ruthless risk management was simply, and I can still remember to this day, the exact issue. And she was just really pissed off because her equity curve was looking like this. And it was good because she was getting higher lows, and the general pattern was up. But what she didn't like was this. She didn't like that. And I said, "Well, why don't you like that, Kim?" And she said, "Because I'm losing money, and I don't like to lose money, and I'm not sure what to do." And so, I thought about it for a while, and then I said, "Well, stop losing money. Period." I'm going to put a period right there. Yeah. Stop losing money. Just stop. Well, and that seemed to work. What had happened was that the success on these parts of the curve were causing something like complacency, overconfidence, maybe shortcuts. And what was happening here at that turning point was the sell-off got her attention, and she got back to basics, focus, and stop playing around. Get serious. Be a serious person. And so gave her that guidance, and she came back to the next workshop. I think that was one of the years we did 2 in a year. And so she came back 6 months later. I said, well, how are things going? And she said, well, here's my equity curve now. And it looked like that. And what she had improved on was that the duration of the drawdowns was reduced, less time in drawdown, and the size of the drawdown was smaller. And there was actually less variation in the slope of the curve. And essentially all she did was if you could just cut that piece out and then clone that and then just slide it up, that's what she was getting. She just was eliminating how long she was spending in the drawdown period. And I said, well, what did you do? She said, well, I did what you told me. I decided to stop losing money. And I said, well, how did you do that? And she said, I just got ruthless with it. I was just tired of losing money, and I just determined I wasn't going to do that anymore, and I got ruthless about it. So we coined the term ruthless risk management. And so that became our watchword for the right habit of mind to approach the trading, like no matter what. Like if you're going to engage in the world of trading inside the battle circle, the number one thing that you should adopt is the habit of mind of ruthless risk management. Before you even start talking about, hey, what market am I going to be in, and what system should I apply, and what is my edge, and all of the things that go into you got some little blueprint over here that's going to have all your systems and all your rules, and that's what you're going to use inside the battle circle to make money. Okay, so you got to have that. But job number one was having the right attitude. The professional mindset. I would almost even go farther than the professional mindset, although I think the professional mindset is a pretty good description of it. The problem with calling it a professional mindset is that feels like words in your head. Hey, I know what I'm going to do. I'm going to have a professional mindset. And if I put that inside the Walking Man, professional mindset, that feels like something that sticks in my head. But the phrase ruthless risk management is something that lives in your heart and in your gut and transfers to your hands and describes every step that you take on the pathway. Like that is fully internalized in the fiber of your being. So it almost goes further than a professional mindset. I mean, I think about a professional mindset when I'm trading at production level of risk and I've got a very specific blueprint and rules that I can follow with a checklist. I got to do those three things that I'm following my checklist. And I've reduced that thing to a ritual that is very efficient and effective, and it can be supervised and checked in a disinterested manner. So that I am immune to the lures of all the ways that can go wrong. You know, there's probably some critical pathway through the world of trading, and you got to hit those turning points and stay on the path. And what kills you is when you see all those points of departure and they lure you away from what it is that you're doing. But there's that, you got to stay on that particular path. And so you have these rule sets and signposts and say, hey, stay on the path, dummy. And so you just got to be professional about doing that. But to me, the concept of ruthless risk management says, before I even embark on that pathway through there, the non-negotiable thing that I'm going to have on board that gives me my edge is ruthless risk management. It's something that lives inside your heart, and it comes from your gut. That your gut just says, I'm not going to lose money here. I don't like it. I don't want it. I don't need it. It hurts the team, and I'm not going to screw around with risk management. Well, that mindset to me has to precede the feelings of professional. Like, I can have an attitude of ruthless risk management before I've developed my blueprint. In fact, I better have that, because I want that sentiment, I want that mindset to influence every piece of work that I do on the blueprint of how I'm going to trade, all the specific details, all the tactics. The tactics is the blueprint. The strategy is the mindset, the thing that is overarching that's going to govern everything I do. And that is to be damn serious about each dollar that you put at risk. Stop screwing around with it. Stop losing money. And be ruthless. It's worth doing a meditation exercise or a visualization exercise every so often that says, what does the word ruthless mean to me? How does that manifest in my life? What are the habits of mind and action that I've adopted that make me ruthless about the risk management? Can I routinely exit a trade that I love without regret and without spending an excess amount of time suffering about the decision? Ruthlessness may just cut it off and slap iron to it, as Josie Wales would say. You know? So the mindset is the thing that I really want to emphasize here, right, in ruthless risk management. Now, what are the things that we can do? The tactics of that. Well, there was a whole bunch of things, and I'll mention a couple of them. One of them was position sizing, and the first thing was the initial risk. And that was trading with the small enough chip that you took all the emotions out of it. That each one of those was a chip that we were going to play on the next 1,000 trades. So she wasn't worried about it. And that was one of the reasons that she could be ruthless about it, was because it didn't matter, each individual trade, it didn't matter that much if I won or lost. Which meant that she could put aside all of that anxiety, which meant she could just execute the rule set without squirreling around with it. The cost of processing the decision was small. So that was a huge issue. And that also let her trade a lot more. Well, that leads you to getting the expectancy of the system. Why do people change the rules of the system? Well, because they want more. And they see one data point, they say, oh, what if I change that one thing and I want to add this, and they try it one or two times and maybe it doesn't go right. So, well, that didn't work. And so they just start bopping around trying everything except just following the damn rules. I wish I could express to you the feelings I get of having taught at the Tharp Institute for 20 plus years. And every single time I go to brief a system, I will say something like this. Well, I've been trading this frog system for 7 years, and I've got over 5,000 trades with it, and it has a 54% win rate, and it pays and it pays 3-2 with the mechanical system, with no overnight risk, in the simplest form, with no discretion required. And the very first question, and it always arrives in less than a minute, is, hey, have you thought about changing it to add this? Hey, have you thought about that? Which always sort of, I get that as a sort of a scientist and a tinkerer, a dabbler. Yeah, I thought about that. During the 7 years I was trading it, and thousands of trades, not only did I think about it, I probably tried it. And what I'm left with is a system that is correct 54% of the time, scores 3-2, and trades, 5 or 10 times a day, every day, in every market condition. And that's sort of the irreducible edge of that system. Have I thought about changing the system? I said, how about, have you thought about just trading that system? Have you thought about that? Have you tried this? So there's a difference between thinking about it and rationalizing it in your head and looking at it as something like guidance or hints or technique, as opposed to rule sets. And hey, while it's in my head, I can just think about, hey, what if I change these other things? I wonder what's happening to it. But, below the neck is the world you live in, and you have to eat with the money that you made. So you got to be adopting ruthless risk management. So the first thing was trading at a small enough risk so that you could get the expectancy of the system. And the way you get that is by trading at a small enough level of risk that you have a stable set of rules so you can accumulate enough pieces of evidence to start putting math on it, to start saying this rule set achieves those results. When I trade that thing strictly, ruthlessly, then I get these results over many days and in many market conditions, and then I can put math on it and study it like an industrial process, and then I can get better, which is why I like short-term trading, because it doesn't take me that long to come up with enough data points to be able to start making some adjustments on the machine that should be running. I want to get the thing running, and then I want to start tuning it according to the rules of how to tune a machine. So other parts of ruthless risk management, locking in the blueprint, changing one thing at a time when you decide on the basis when I have a system that is in control, and I'm going to borrow the language from Dr. Deming and total quality management and statistical process control, before you make any changes on a system, that system must be in control. Well, what do you mean that it's in control? It means that I have isolated it enough and reduced system error, system noise, system variation. I have reduced that to a small enough degree that that system is under control. And then what I can do is I can determine, hey, the residual variation is coming from the environment, that there are environmental conditions that are causing this thing to move. And it's not variations inside this very efficient process. So in a manufacturing process, you can actually set up a controlled condition in your factory to eliminate a lot of that stuff. You can't do the same thing in the marketplace. You can approximate it by making some decisions with your filters and say, I'm only going to trade at this time of day. I'm only going to trade these patterns. I'm only going to trade that much risk. I'm going to have this much mindset that's under control. I'm going to have all of these factors in play that allow me to start picking those moments in the market when I'm going to trade. I'm only going to trade in the market when this system is ideal or optimum or good enough. So there's a limit to how much you can control that environment, whereas you can control it perfectly in manufacturing. I mean, you can set, if you're making semiconductors, you can set up a white room, a clean room, and now you can produce semiconductors under ideal conditions. Well, when you try to do that in the market, there's so many environmental variables happening that you could spend forever trying to put 1,000 filters in, and then you'll never see them. And then you never get, now you have a perfect system that never trades. Well done, you know. So there's a trade-off between how fuzzy and how noisy you can have the market and still be effective. So the word for that is robust. If this circle represents all of the possible market, whoops, God dang it. Every time I hit that little button, it gives me a continuous line. So if that circle represents all of the market conditions that are possible, I can narrow it so I'm only going to trade that system under those conditions and then under these conditions. Now, if you get enough of these, there's always something to do. So that's good. Or I can also say, hey, let me have a system that trades like that. It allows for more conditions. Maybe the expectancy isn't as high, but the number of trades that I get compensates for the lower individual returns, so I'm getting a lot more opportunity. So the word for that is expectunity. Which is a combination for the number of trades times the value of the trades, or the expectancy. So we're always in that little trade-off. Something like the sniper or the owl has a feature that makes it fractal, which says that no matter what time frame I'm in, I'm executing that pattern the same way, and it just takes more or less time for that thing to unfold, for the psychology to unfold, because it's finding moments of psychological complexity when there's a lot of traders on both sides of the trade fighting harder than usual to win, and the result is a bigger move in either direction in that time frame. So the robustness of that strategy comes from the fact that it works in different time frames, as opposed to just one time frame, just one target, and just these 20 conditions, that it gives us a robust approach to the market. And when we come over here and look at the 7 patterns of regression line crossover, this was our first effort at trying to describe recurring patterns in any time frame that we could use to trade that particular pattern. Those got refined into generation 2, which was the owl, the supported spring crossing, the collapsing dragon, the Z3P, and all that stuff. And that refinement, in my opinion, was better than trading those particular patterns. And then we started just using these patterns as descriptors or as filters. We're saying, hey, I notice that I have a generation 1 pattern that allows me to stalk a more specific generation 2 pattern, to be more precise. And then by having any time frame that I could trade those on, we get the robustness, because now all I got to do is study the market condition and say, where is the tradable volatility at? Hey, the day trade is too choppy and there's no follow through. Okay, so it's not working at that time frame. I either have to go down to hourly or 30-minute charts or move up to weekly charts and find the volatility that seems to be in play and be able to trade that. So one of the things that comes out of, another thing that comes out of ruthless risk management is to be ruthless about finding the edge, ruthless about finding the good enough pattern to trade, and only trading that. So you can have a robust pattern. It doesn't mean that you're trading all the time. It just means you have to go into the market and find what is working. Is it the robust pattern that is a little sloppier or doesn't have as much follow through? Or is it the precise pattern that's really working? So ruthlessness had to do with risk, the ruthless risk management part of that had to be with picking the time and place and target of finding your edge. So all of those things go into ruthless risk management, and then getting it into your trading plan, and then being ruthless about executing your blueprint. So not only do you have to have the strategy and the mindset and the attitude, I would almost precede this with saying, hey, it's attitude and mindset, and then ensure that you are ruthless about hunting down the opportunities in the market. Is it the 30-minute swing? Is it the 3-minute technique? And then executing the tactics with ruthlessness with the small enough chip stack so that you're not spending a lot of time where, I decided because the first 2 didn't work, I'm not going to take the third signal, which turned out to be the amazing entry. Okay, well, what? You let 2 adverse data points? It should be 20 in a row before you say, maybe this thing isn't right. Maybe it's, maybe 20 is an exaggeration, but 2 isn't right. So ruthless risk management as an attitude, as a strategy, and then specific to the tactics. So that mindset of ruthlessness is what gives you the energy to complete your damn plan to the degree of detail that you can then execute, and then be ruthless about the assessment and doing and posting the charts. How many guys start posting charts, for a couple weeks and then stop posting charts? Where's the ruthlessness in that? When you stop posting charts in the chat room, I just take that as a signal that I've done as much coaching for you as you want or need or can use, because you're not doing the things that get you my coaching. And I accept that. On the football team, there's a head coach, there's a line coach, there's a quarterback coach, there's an off season, there's other games. I get all that. Doesn't hurt my feelings. I just know how hard it is to do all this stuff, trying to learn other people's systems and being coached and all that stuff. I know that's hard. So it doesn't bother me. Except whatever energy and emotion that comes out of that, I just try, to be a better coach. I try to be a better coach. So ruthlessness has to do with the persistence of sticking to a game plan that you have reasons to believe can work. Now, ruthlessness is not much. Maybe I shouldn't be playing that game because I've done all the things and it's not working. Whatever. So think about it as an attitude, as a strategy, as tactics. I'm going to try to find... there was a chart that I showed last week. It was a list of things for risk management. I gotta... So if you have only one slide deck with 1,000 slides, properly organized, you can find that shit. So now what I got to do is take the 50 presentations I have and kludge them into one. I don't know how many times I have started to merge all 50 decks into one, and I never complete the task. It's just too hard. So what are some of the things that you can do for ruthless risk management? Well, where did this list come from? It came from one of the research weekends and live trading weeks where we just sat around and said, now, damn it, what do we mean by ruthless risk management? So what do you do when you ask a question? You make a list. You unpack that stuff and you get it down there. And these are all the things that you can do operationally. When you go from a mindset to I'm going to adopt a strategy of risk management and I'm going to use these particular tactics. You associate tactics with a system or a checklist. But a strategy is just sort of general guidance of what to do when you don't know what to do. So we put this operations in the middle, and that is sort of the how-to, the artful tools that we're going to apply. So this is an example of an operational idea. When I think about all the systems that I'm using, system 1, system 2, system 3, I can say, let me consider how am I applying the principle of diversification inside of that system or inside of that time frame? Hey, in my swing systems, how am I applying diversification? Well, am I looking at different targets, different times, different seasons, different systems, different parts of the curve? Like, do I have swing systems that are designed for the winter, the spring? Do I have some that are trend following? Do I have some that are counter trend or reversion to the mean and reversion to the mean? Do I have breakout systems in there? How have I implemented diversification? Where am I not diversified? Is there some system that I can incorporate in my overall swing strategies to achieve more diversification? And is that worth the cost? So it takes time and effort to do that. You got to bring a sense of inevitableness. Ruthlessness is sort of inevitability. I know that coach is going to come in and he's going to make me look at the game film, and he's going to point out all the errors, and he's going to point out all the things that we did well, and we're not going to be done until we're done. There's a certain ruthlessness about that. In the last 30 years, I can tell you how many times I have not produced and published a daily report. Twice. 2 times in 30 years, I have not produced a daily report. And they were produced within a day to catch up, and it took that much circumstances to not produce it because there was a ruthlessness in my mindset that comes from a value of duty to others. I produce that daily report for others who I believe are relying on it to feed their families. And so if I was only trading for myself or only producing that report for myself, there will have been many times in the last 30 years that I would not have produced that report, and then I would have probably not traded the next day, or if I had traded the next day, I'd have probably been bad or not optimum, or worst, I might have been good and then say, I guess I don't have to produce that report, and then accepted a shortcut. And when that's the complacency that starts giving you this kind of equity curve, which is it's good enough, but it's out of control because the variation is too much. So if I want that system in control, I got to be ruthless about doing the things that screen out all. So my sense of duty to others drives me to produce that daily report. And then 3 years ago, when I started doing, was it 3 years ago? Yeah, more than 3 years ago, March 2020, I started doing, at COVID, I started doing the daily podcast. I did that with a certain sense of despair because I knew that once I started doing that, that was going to become part of a daily ritual that now all of a sudden at 8:30 every night, I'm committed to doing that thing come hell or high water. I'm ruthless about that. There's a handful of times when I don't do them live, and I announce them ahead of time on Patreon, and then the only thing that stops me from doing that is attending a soccer match with my family or with my kids. And then I try to do it ahead of time or follow up with it afterwards, and I get it done, but it's not live. So there's this sense of ruthlessness in the mindset and the strategic approach that says, now I got to be ruthless in how I'm going to apply these things. Have I done position sizing? Have I calculated my overall portfolio heat, which is every open position, if it hit my exit right now, what is the total hit on the portfolio? Diversification helps you reduce the probability that they all go wrong at the same time. So if I have some systems that are long and some systems that are short, the probability that a market condition happens where the long systems all failed and the short systems all gained to where the maximum loss was taken, the probability that happened is reduced because of diversification, but it's still a possibility. So what's my total portfolio heat? Am I benchmarking the system against the robot so that I know if my trader quality number is still good or bad? Am I following rules? Do I have very specific objectives? Have I identified my risk tolerance and trading at a level that allows me to take 1,000 trades without overriding it? Do I know the rolling expectancy, 30, 60, 90? Am I using the moving average of equity to determine how it's going? You see that in Luke's work. Am I using 20 or 30 trades? Can I study fundamentals even though I don't use them, but can I pick targets that have fundamental reasons why fundamental traders would want to own that or sell that? So what do the fundamentals say about it? Even if I'm not using them, is there some way to reflect that? Can I find things that have extreme value, like a real estate investment trust as a target, which has some value that is attributed to the underlying instrument and which pays a dividend, which makes it a very interesting target? So if I can apply my tactics on something that has an intrinsic value, like gold, is gold ever going to go to zero? No, because it has an industrial application. So how can I design my system so that I can assume that I'm wrong until the market proves me right? How is that idea reflected in my ruthless risk management? Am I doing debriefings to my accountability partner or to my trade chart? Do I have these things? Am I doing those things? Do I have a system? So you asked me what ruthless risk management was. Mindset, strategy, operation. This is operations. And then tactics is the exit strategy. Have I thought my way through what is an exit strategy that is appropriate to the system? I've talked before about five exits and turning that into rules and sniper exits as a trade-off and all that. So ruthless risk management is all of those things. Each one of those that is specifically tuned to a particular system. Now, some of those tunings end up becoming things that probably fit on this chart. Like, to me, the sniper manager exit was sort of a moment of zen for me in the last couple years, which said, hey, there were conditions when I see the dragon horns and the manager exit. Sorry. The manager exit was the Bollinger Band mean that's inside the river. And then there's some dragon up in, so on a runaway move, you know, the best move I could ever get is this thing that had some breakout like a Z3P. You know, max pain, range compression. This is like I live for this. there was some horrible sell-off from some peak. Which gave me some kind of optimum peak value to return to. And then there was just this horrible, terrible, bad, not good move that then compressed into these little dojis. And then there was a breakout that went right back without hesitation to that previous one. And now there's this little rollover. And I'm holding this amazing return on the smallest possible risk box. And when I look at the chart, there's the edge of the dragon, the spine of the dragon, the belly of the dragon, the PSAR, the edge of the river, and then the Bollinger Band mean. Well, over a long enough period of time, the Bollinger, as long as this thing stays north of the Bollinger Band mean, there's a trend that's working, and maybe the Bollinger Band mean for the longest possible term is a working definition of let the trend run. And it's not over until the Bollinger Band mean of the river is over. So in the meantime, what do I do about this? Am I willing to... I can see the fact that I got this abnormal gain. Am I really just going to let all of that go away? If so, don't even look at that shit. Take the breakout and then just follow the Bollinger Band mean and leave it the hell alone. Except that I've learned that there are conditions in which the abnormal gain should be respected. And so I now have this sense of, from the Z3P, what is the normal game that I should just let the rules, whatever the rules are, I should just let the rules get them, whether it's the Bollinger Band mean or the PSAR, and not worry about invoking the sniper. So what I learned was, hey, if I'm up here and I feel like the sniper inside me wakes up and says I should invoke the sniper, and the sniper exit is right here, I just take a half at the sniper and commit a half to this and be done with it. No thinking required. Done. So that's how I implement ruthless risk management. I've just decided that I'm going to take the sniper exit, whatever that means to me. Whatever that sniper exit means to me, I just ruthlessly take it with half the position, and then I commit the other half to the manager, whatever that means. The manager for me is the damn Bollinger Band mean. Or not Bollinger Band mean. It is the PSAR. Done. I will tell you what the sniper means to me right now is the dragon skin. How many times on the 30-minute chart for swing trading, that hybrid swing trading, you've seen that thing collapsed and then started doing that, and then you see me just routinely take the skin of the dragon. Done. And I just happily take that trade. Done. If this thing was so amazing, I'll take half somewhere in here, 1, 2, 3, and dragon exit, done. I don't care about anything else because the ruthlessness of executing that has eliminated all of the anxiety associated with what's the best possible exit to have. I just want the good enough. If it was that much that I notice it and I'm nervous in the service and it has failed to fail further, I'll just take half in here and half here. Done. And I don't care about trying to optimize it any further. Because once I exit here, you know what I'm ready to do? I'm ready to enter on the price leaving the dragon. And when you saw me last month change my PSAR setting from 0.2 and 0.12 to 0.2 and 0.14. And the reason for that was it made the PSAR go from here to here, to the edge of the dragon. So that when I got that exit, I was now psychologically in the zero state and ready to take it as soon as it left the dragon, as opposed to waiting for it now to hit the PSAR. Just that little bit, that was enough of a tweak in an indicator to go from 0.12 to 0.14 that now the PSAR was lining up with the edge of the dragon, the north edge of the dragon, enough that I could now just execute without worrying about it anymore. So I made a nudge in the tactics of an indicator, and guess what that is affecting every system that uses the PSAR. On my core, on the swing, on the hybrid swing, on the day trades, that was enough of a tweak to change for every implementation of that idea. It took me suffering 5 years to make that decision. The last time I changed that was 5 years ago. But I made that change this month because I wanted to simplify my life and simplify that little decision. So that's why I've done 0.14. So if somebody asks me, hey, Ken, that's the setting that you're using on the PSAR. Have you thought about changing the value of the PSAR? I will happily answer, yes. Yes, I have. In fact, I never stop thinking about changing the factor on the PSAR. But what it takes me to do is 5 years of suffering, maybe not 5 years, maybe 3 years, maybe 6 months, maybe 1,000 trades. Or the irritation that comes with noticing waste or difficulty in making decisions. It gets to the point where I just have to study it till I make a decision. So, you asked me about ruthless risk management. That's what I mean about ruthless risk management. Keyword, ruthless. The word ruthless is not a head game. That thing precedes the first step into trading, a certain ruthlessness about it. So where have I learned to be ruthless? There. Life or death. And not my life or death. Other people will say. So, if you want to adopt a ruthless mindset, you better figure out in your life, don't do that. What is it about your life that rises to the level of life or death considerations? Hamad, I know how you're going to answer that. your children, your family. So I want you to visualize, and don't share that with them, the evil inside you that you're going to leverage to protect them. Is there anything that you wouldn't do to protect them? No. There's nothing that you wouldn't do. Nothing. So, there is a certain degree of seriousness about you in that moment, in that setting. And you better reflect on that, because that reflects your deepest core values. That's what teaches you how to be ruthless. So, if your trading is designed to feed your tribe, that's what you're trading for. And you better be ruthless about the things that you do to improve your trading to protect your family. Or it ain't for you. Now, if you're a hobbyist, you will never do the things that you have to do to be ruthless about it. There's a lot more people who are investigating or curious It feels good when it's working. Oh, so let me try. I'm curious about it. So the first thing that I want to know when someone comes to ask me about trading, are you curious about trading or are you serious about trading? I will never tell them about systems, power tools that you must be serious about to survive. Like power tools that'll cut your hands off or blow up in your face and kill you or whatever. I am never going to tell someone who's just curious about trading what that system is out of fear that they might harm themselves. But if you're serious about trading, what is the evidence that you're serious about trading? Well, behaviors. Seriousness leaves tracks. You know? Hey, I believe that you are serious about trading. Well, why do I believe that? Well, because you told me. You've said 1,000 times you're serious about trading. Well, I guess that means that you're serious. No, it doesn't. It just means that you think I will accept that as evidence that you're serious about trading. I don't. It makes me curious if you're serious, I guess. Are you really serious? I don't know. Now, I'm not saying that this is the only way that there is to trade. I mean, there's other guys that could be serious about trading that don't adopt this mindset or whatever. I hope you're successful. That was one of the things that finally prompted me to write the book, was to say, all right, well, just show the due diligence. What do you do? What are all the things that go into what you consider to be due diligence and seriousness about trading? And it does come back to this, pardon my language, back to that word, ruthlessness. You want to tap into your ruthlessness? Tap into the most important value in your life. You're going to be serious about it. There is nothing that you wouldn't do to protect them, and let that provide the energy and the discipline and the focus to do the things that must be done to be successful in trading. And then do that. You have to be in the game long enough to get many iterations so that you have enough time to learn. It takes time to learn how to do that stuff. Most people don't budget enough time to do that, because if they were serious about this, they would realize how long it takes to achieve professional knowledge, and then they would trade at a low enough level of risk to see if they have the ability to learn, if they have the right material to learn, if they have the habits of mind and the discipline to learn, and then do it in order to get the positive expectancy. Plus expectancy. So don't lose money. Be ruthless about it. Here's how you do it, is it starts with the psychology of values and what you're trading for. What is the purpose you are trading for? Maybe the single biggest difference between Van and I was that Van traded as a means of discovering his inner voice and spirit and whatever that means. I'm trading for life or death of my family. That's the difference between the two approaches that we adopt. Van was willing to experience all of this as a journey, using trading as a metaphor for the journey towards spiritual enlightenment. I'm trading for life or death of my family. I want you to notice that there's a difference. I appreciate and I understand that, and I'm on that journey. But job one for me is ruthless risk management for my family. Hey Ken, how come you didn't join the Super Trader program and go through all that other stuff? Well, risk management. What if I faithfully adopted all of those principles and I changed my fundamental identity of who I am and what I stand for, and I'm not going to do that. So I don't even go there. It was never a possibility that I was going to do that. Never. Because that's a risk that I'm not going to take. Because I'm trading for life or death of my family. I accept that. I'll find my spiritual enlightenment in other areas in ways that allow me to accommodate the central duty of my life. So now I'm getting philosophical. So you asked me about ruthless risk management. Mindset, strategy, operations, tactics, and that is a continuous improvement. I can connect that decision to change the PSAR value from 0.12 to 0.14 as a way to reduce the difficulties of just executing my exit ruthlessly. And the degree of suffering and effort I put into making that decision had an element of ruthlessness about it. And that ruthlessness is connected to my strongest core value. 100% of the things that I decide to do get run through that filter for me. And I'm willing to do whatever it takes, to include figuring out how to do all that stuff for me and for others, and committed to teaching it. Because the commitment to teaching it to others binds me to the value of do no harm to others. So I strive to be the best teacher that I can be, which drives me to do the due diligence that I must do to feel like I can teach it, which is good for other people, and it's also good for me, because it drives me like a maniac to understanding those things on that chart. So that's everything that I want to say about that. I'm going to defer these other things to Thursday. I was just going to review some patterns and technical pieces. That can be taught anytime, and I've gone through those before. But so thanks for the good question on ruthless risk management.
Thank you very much, Dr. Ken.
I hope I've answered that question.
You have
Because if I haven't, the next answer is probably a 2-hour answer, and I don't know that I could. I don't know that we could survive that.
That was great. That actually
Was it helpful?
It was great for me, at least. It really made me reflect on like my entire journey, specifically this year when I've started trading for a living, basically.
Yeah.
And I actually feel guilty about all the times where
you're posting charts.
Not posting charts and not being as ruthless as I should have.
Okay, fair enough. Here's what I want you to notice. I don't ever want you to think that you should stop posting charts because you're wasting other people's time. Here's a piece of ruthless advice. Seriously. You cannot waste other people's time. Only they can. If you post a chart, I'm going to give you feedback on it. If I thought that was a waste of my time, I wouldn't do it. So, if posting the chart is not wasting your time, it ain't wasting my time. If somebody else doesn't want to listen to that, there's a very easy solution. Don't listen to it. Do something else. Listen to the recording and fast forward through that. Problem solved. You cannot waste somebody else's time. Now, let me give you an example of a couple guys. Griff. So Griff Cooper posted about maybe 1,000 charts on the Kata 2 challenge. He took the Kata 2 challenge. As a result of that Kata 2 challenge and feedback, he took a half a page rules and made his own rule set, which became a course with my help, and where he became he's now capable of coaching that, and that has now become a business. In addition to trading it, he's now teaching it in a way that I find professional. He's not posting 5 or 10 charts a night anymore because he doesn't have to. Because he has rendered that into an artifact which has become rules, courses, coaching technique, and a business that is repeatable. Ken Hum did the same thing for swing trades. He posted over 1,000 charts. 20 charts a night, 20 charts a weekend, every weekend for 3 years. That's 150 weekends times 20 charts, that's 3,000 charts. He refined his personalized swing system, which is a hybrid, through that process. He's got other things to do now on a Friday night and Saturday night, but he's contentedly trading that system. The things that I learned with him hammering that out is what I'm doing every night with 30 charts. Only I'm doing that 30 charts every night for 9 months. That's 200 trading days times 30 charts. That is 6,000 case studies of the 30-minute hybrid swing system documented every night in that archive. So when somebody asks me, have I thought about changing the... Yeah, I have. I think about it every night on every trade. Because the things like the standard trade frame has a set of questions. What do you see? What is it doing? Where could it go? Which way do you want to trade? How would you trade it? Where would you enter? Where would you exit? All of that shit. Every fucking time. And then on a winning trade, what about that set of questions? That's exit management. The initial thing has the exits built in, the routine. This is what I'm starting to think about. On a winning trade, it's now my money. That's extra work. But I only do that extra bit when it's already in my favor. So to go back to what you guys were talking about early, about when it gets to point 2, do I raise my stop to break even? I would let it get to point 3 and raise it to point 1. Why? So that you make some money. You took all this risk, and your first move was to eliminate the... Really? Just do that. Just see what it feels like for the trade to disappoint you and for you to make 0.1 net. Just try that for once. You know what the edge is in Vegas? They built a city in the desert that thrives on that. So that's an example of a nudge, of a tiny little shift in mindset that you should apply to every single thing you do, ruthlessly. How can I make this the tiniest little reliable win and think like the house? Think like the house in everything you do. That's ruthless risk management, because that gives you resiliency. You get a self-funding system at 0.02 if your admin costs are low enough. That's the difference. So then if my average win is 0.7, hey, I'm aiming for 2. A 2 to 1. 2.0 R. And my average win is 0.7. And if it gets to 0.3, I'm trying to figure out how to nudge that up to 0.1. That's what I'm aiming for. That's what I'll settle for because it removes all of my anxiety. So I guarantee you that the move to no lose plus dinner for two is motivated by a sense of ruthlessness. Because when that happens, I am slamming an iron door shut and double locking it. I am not losing money on that trade. That's what I mean about ruthless risk management. That's what I meant when I talked to Kim Anderson about don't lose money. Stop. Stop losing money, Kim. Do you understand? She said, yes. I said, what do you understand? That I'm going to stop losing money. I said, prove it. With evidence. I'll see you in 6 months. And that was the difference in her trading that day. She went from a individual independent trader with an equity curve that looked like this to a systematic trader whose equity curve looked like that, and she could teach it to others. The shift in mindset from independent personal trader, hobbyist, who's curious to see if she could do it. She had gotten good enough that she was pretty sure she could do it, and she was doing it. But she was suffering with these drawdowns in an otherwise rising, and it took extra level of effort at every one of these to get back to basics and do it. So we just said, all right, let's just eliminate that piece. What does R stand for? Ruthless. So when you are in the true story circle, in the roundabout, after some period of journeying, that's where you rest, you reflect, you remember why you're trading, you reconnoiter, you rework, you remember your ruthlessness, you raise your level of ruthlessness. All of those things are happening in that circle until it's time to go trade. That's why true storytelling based on evidence with trusted others, you got to have some place, that fortress of solitude, your workshop. What is your workshop and where is it, and how do you get that done? With your accountability. Who is on your team that shares that level of wild maniac craziness? In your little ring of power, whatever that, if I could use an analogy. One of the reasons that the True Story Circle works is because you have all of these people that are coming to it with that same commitment, that while they're in that circle and, you know, they're telling their true story as best they can so that the people may thrive, and that, you know, we're not judging you. We're listening carefully because we respect the work that you did to bring the true story to the circle. What do you think each one of your charts is? What do you think that is? That's a true story of evidence. You know how hard it is to do that. The people that know how hard it is to do that in public those are the people that I'm working for. And I'm not wasting their time because only they can waste their time. If what we're doing is wasting their time, maybe that's not a judgment on what we're doing. That's an independent judgment that they make about what to do with their time, which I respect because that's their judgment to make. It's their time, which is precious. They'll never get that back. And I trust people to do what they think is right with their time without judging them. They're just not going to do it here. I get that. Not worried about that. Doesn't hurt my feelings anymore. Used to. Used to lie awake at night. What am I doing wrong? I just freaking, oh, that's right. Other people have other things. Got it. So just get over that. And own your time. Own your effort and level. So that's what I want to say about that. I should probably have checked to see if the boys are here. Yeah, let's see. The creativity guys are not here, so we haven't wasted their time. All right, so that's what I want to say about that, and I think we'll just do a quick checkout. So thanks for a good question. I was trying to think of what it is I want to say to people that buy the book and are curious. That's probably what I want to say to them. What do I mean by ruthless risk management? Well, if you really want to know, here you go. Of course, if 1,000 people bought the book and then listened to that last hour, how many would listen to the whole hour? I don't know. But that's also their choice to make. Maybe that's not what, maybe they want to sign up for that. Okay. Hey, I just want you to give me the half-page rule set. I can do that too. But you've been warned. Don't exceed this level of risk or you cut your own hand off. Let the buyer beware. And the market's going to teach you. The market's going to teach you everything that you really need to know at some point. So that's all I got for today. You guys take good care. Think about that. If there's other questions or other things you want to ask me questions on, just keep sending them. I'm happy to help. Take good care. Long out.
Thank you, Ken.
Thank you, Dr. Kemp.
Yep. Take good care, fellas.